All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyway, so we had a nice rally this week as predicted. So S&P up nicely. You can see Monday had a little bit of a pullback day after the really big surge last Friday, and then really just 1, 2, 3, 4 straight up here. And the spiders actually closed just above that 200 moving average, and we closed right on that trend line, which goes back to all-time highs there. So right into that kind of nexus there of resistance here. Again, we're basically right into that gap fill from the 14th. That was post FOMC in the month of December. So that should be resistance as well as that trend line there. Markets are still hanging in there okay. I don't have any sort of sell signal just yet, but there isn't a lot of time on the clock if you ask me. So you guys know I trade cycles quite a bit. And I think we're coming into another down one pretty shortly. But the S&P hasn't indicated that there's any issues just yet. However, it is very interesting to see how, a week or so ago, we were calling for a rally, a short covering rally squeeze. And, everybody was saying, oh no, this is a bear flag here and it's going to break down. We're going lower. And of course we went higher. And now just in a mere, 5 trading days, the sentiment has gone, from what I can see, it's gone completely to the other side. So everyone's bullish now. Everybody's calling for the bear market to be over with. And we're getting that kind of sentiment shift, which is what needs to happen in order for the market to top out. But currently, we are into some resistance here, so we'll see what we get. Obviously, the gap fill at 399.40. That was not technically filled here on the spider. So the high of Friday was 399.10. So, basically, it's very close, close enough for government work. But regardless, if you do get through that somehow, if we are to consolidate, we could possibly push up just a little bit higher. Max move here would be really up to this 410 area. I'm not even sure we even get up there, but, it is something that you have to consider, and you always have to look at all possibilities. Now, we do have options expiration for the month of January coming up Friday, and January is also a leap expiration, so there's lots of long-term premium expiring as well. So there's a lot of premium expiring now for the month of January here. So could be a lot of backing and filling, could be a lot of institutional game playing. So always want to be aware of that going into an OPEX week. But all things considered, I would not advise opening fresh longs here. I think we're at the closer to resistance than we are to support. But to me, it's more about time right now. I think time is more important than price currently. But the market's holding up for now, and we'll respect that for the time being. As far as the triple Qs here, so your upside levels here, we just tagged that 100 moving average there on the daily. And on the weekly, you can see we closed just a hair above the 200 and 20 moving averages and that 280 level. So again, I said, for a while here, going back to late December, it's like we probably should bounce here on the Qs, and we'll go and back test that 280 handle, which we have done, and now we've closed above it. So that is now completed here. If we have a little more upside, you've got this high here, this gap window at 283. And if you get through that, you've got the full gap fill from the post FOMC gap down at 286.51. So those would be your levels there on the triple Qs, but they've had a nice move off the lows. And again, they're not showing any sort of issues at the moment. That could always change very quickly, but for right now, market is holding up okay. One of the reasons why I'm still giving the market a little bit of an upside bias here is take a look at the Russell 2000. So this is the December 14th gap right here. This is that candle. So we're look at that candle. Look where the Russell is. That's been above that for the past 3 trading days. You look at the spiders, there we go. We just got above that. Well, I suppose we got above it in the last three trading days, but look at, this here is the December 14th candle. This one was a different gap fill the next day. So apologies. Look at where we are here. We haven't even technically filled this gap yet on the spiders. Yet the Russell 2000 is well above that. The Russell is actually above the FOMC high candle. So the Russell is showing leadership here, and what that means is that there's money flow into risk assets. Now, I don't expect this to last long, But what it tells you, though, is that this market's not quite ready to top out. Now, if this starts to roll over and the spiders are starting to hold up, that's going to be telling you that the market is getting ready to roll over here. So, but for right now, the Russell is holding up. It might want to go up and test this white line here around 188.30. Maybe even up to 190. But just be aware of that right now. That's one of the reasons why I haven't gotten too bearish yet. But eventually, time will take over and everything will come down, if you ask me. But just wanted to point that out there. And then if you guys follow the Dow, upside right now is probably to 345, which is this pivot high here. If you get through that, then you get up to 348, which is the double top. Another reason why I haven't been too bearish, if you look at the semiconductors, they have been outperforming here. They've been above their 200 moving average for the last 3 trading sessions. The spiders just closed above the 200 moving average on Friday. So again, semis continuing to show leadership. That is not a bearish sign. In the short term, might probably wants to go up and test 230. If you get through that, it's the double top there. But semis also holding up well. Cloud software having a nice bounce as well, back above the 100 moving average. Just may want to get to 267, maybe 270 here. But cloud software is behaving well as well. Eventually, these will all roll over, though, so just be aware of that. Now, one slight bearish indicator here is the Dow Transports. So they've had a nice move off the lows here, but on Friday they were red. So we did have some airline stocks report. I do believe we have trucking names, and a few others reporting this week here, as well as a bunch of other airlines. Delta reported on Friday, it gapped down pretty sharply. It did rally nicely off the lows, though. But the transports were lower on Friday on a day where the market really had a nice up day. And this is what I've been saying here is if the transports start to roll over while the spiders are holding up or moving higher, that's going to be your divergence there. That's telling you the market is getting ready to roll over. So be aware of that. For right now, it's just a one-day little indicator. It's not the end of the world just yet. And again, it was very earnings driven, so very knee-jerk reaction. There's a knee-jerk reaction essentially, but definitely something we need to keep an eye on here. But transports, I think the upside is limited here as well. Again, you do have this trend line up here. This will be resistance. If you get through that, there's a lot at 14.6 there. So just be aware of that on DJT. Over to interest rates here. So the 10-year, again, bouncing off of this kind of white trend line there. And it's holding up for right now. The TYX here, the 30-year, had a nice reversal. If we look at ZB, 30-year bond futures had a really nice pop, a little inside bar here and a pop on Thursday, and then backed off just a little bit on Friday. Now I'm doing this video on Monday here, so you can see the futures are down a little bit, although markets are closed today, but futures are open here. If this consolidates further, this can push up here, but this has been pretty good resistance here on the ZB. And going over to me right now, the ZT, the 2-year, is the most important right now. Because if this starts to roll over or breaks down, it's going to be a huge problem for the market and for the Fed. But for right now, I still expect it to get up to this inverse head and shoulders target, as we had a nice reversal last week, and then we put in another inside bar here on the daily, and on the weekly you still have this inside bar here intact. So this can still move up here, and that would be a net positive for the market in the short term. So I guess that you can add that to kind of your bullish case here for the near term. But if this starts to break down, it's going to be a huge negative, because essentially what that says is the Fed has more work to do. But for right now, it's holding up, so we'll just leave it at that. Home builders here, XHB and ITB, both having nice weeks with everything else. Upside here is limited. I've been telling you guys for a while. ITB, actually a long time. The ITB wants to go to 66, and it never quite got there back in December. And right, we reversed down, and now we finally got there. So that upside objective has finally been hit. Same thing there on the XHB. These can both go to about 68. You see this pivot right there. That's possible. For the ITB 68, again, you got these pivots up here going back to March. That is also possible, but that is about it that I see on the home builders. I do not like them in 2023 after this rally here is concluded. VNQ, same thing. Also kind of looking like the transports here, where you were down Friday with everything else green, so showing a little bit of weakness there. Maybe this can get up to $90 and retest that area, but that's about all the upside I see for it at the moment. I do not like VNQ here. XLF, so we had obviously some bank earnings as well. A bunch of money center banks, Bank of America, Citi, Wells reported. Goldman and Morgan Stanley, I believe, report on Tuesday. So there was kind of an initial knee-jerk sell the news, and then, hey, XLF recovered, so give it give it some credit there for gapping down and then recovering green. That's usually a really good sign in the short term when you have, an earnings gap or news, gaps a stock down, and then it can able to rally back to the flat line and close green. I mean, 0.75% green is pretty good, considering a gap down probably like 1% in the morning. So that's a good sign there in the short term. I don't have this going that much higher though. This can get above double top. I've already got max move worked out on it. But the upside is pretty limited though, so just be aware of that. I do not like banks either, in addition to not liking home builders. Broker dealers, this can get to 490 here, but that's about it. It's had a nice squeeze off the lows, so we'll respect that. Again, remember, Goldman and Morgan Stanley will move this on Tuesday with their earnings reports. Crude here, so getting over to energy. Again, so a little development this week. Previously we had this move, and then we had an inside bar. Well, on Wednesday, we had a nice outside move here, this big surge, and we closed above this inside bar, so that is negated. And now we have that possibility of an inverse head and shoulders in play. The one thing I want to caution everyone on is everybody, a lot of people fall in love with these patterns here, this inverse head and shoulders. But you also got to look at the weekly, though. And you still have a weekly inside red bar here. So until you get a close above this on a weekly time frame, this is still a red inside bar, which could indicate lower prices. So don't fall in love with the daily pattern. Look at the weekly as well. And if the weekly is not confirming, then you should be careful of the daily time frame. So don't think that this pattern is going to play out until we see that confirmation on the weekly time frame. So now we have conflicting essentially we have conflicting time frames here, and the weekly is more dominant, so just be aware of that. But for what it's worth, this is a good pattern here. It hasn't triggered yet. It's Monday. We're still just backing off that level. My guess is they'd probably try to trigger it, and then we get a failure, and you get a lot of longs trapped in this area. So because I still have crude and energy just being kind of under pressure here for the near to medium term. But for right now, we'll respect the pattern and we'll see how it plays out here. I wouldn't personally do anything with crude at the moment, though. XLE continues to hold up really well. This wants to go and test 80, what is it here? Excuse me, 91.50. So that's going to be this red bar high. It's going to want to go up there and test that. After that, I'm not sure what it does. XOP. This probably wants to get up to 145 here, but it's still stuck inside of this range. And you still have a weekly red bar. So I wouldn't do anything with energy at the moment. OIH, on the other reason, oil services continues to outperform. This has negated that red bar. And this can get up to 360. So just be aware of that. Now, I know I've originally said I expect this to go down and test 250. I still think it does that. Excuse me, if that's not later this year or maybe quarter two, if we have some type of correction, I think this does need to get back tested here. But for right now, the OIH has held up really well, and I would honestly give it the upside bias of 350, 360 here. That does not mean chase it. That does not mean buy it. Okay, it's at 52-week highs. It's already a little overbought here, so please don't chase it up here. But that is where I have it going currently, if everything holds up here. Over to nat gas. So nat gas, it managed to hold that level there on the weekly for the most part here. And we had a little bit of a gap up in the overnight. So there was a pipeline explosion in Lithuania. I'm not sure if that has a lot to do with it. We also have, it now looks like we're going to get an Arctic blast here over the next couple of weeks. So more kind of normalized weather. We've had much warmer weather than normal here in the Northeast and really in most of the country and a lot of the world as well. I think Europe has been a lot better here, but now it looks like we're going to get more of a normalized kind of winter temperature here. So nat gas may get a little bit of a bounce here. I still think this has to go and back test 450 at some point. This is just too oversold. I mean, it's down over 50% here in, it was in like 3 weeks at one point. So this should get some type of a bounce here. This is also a very good technical level at that 200-week moving average. You also have these pivots right in here. Very good support. Failed bear flag there on the weekly. So that should be support here for a bounce here. So I am favoring a technical move here in nat gas to the upside. Okay, let's get over to uranium. So CCJ had another powerful move again. It's holding up well. Again, we talked about this last week. It had a nice move here. If this consolidates further, this was going to want to go up and test 27, which is going to be this red bar high. It probably needs to do some backing and filling to do so. But again, it's showing a lot of resiliency. Again, we have a big weekly red bar here, and it has not been able to break down. And it was, in fact, able to negate, we talked about this last week, obviously. It was, in fact, able to negate this red bar here with last Friday's close. So uranium holding up really well. URNM here, same kind of thing here. This wants to go up and test 36, maybe 36 and change. And then Sprott, SRUUF, I'm looking at about 1275 to 13. But I think they need to do a little bit more flagging here in order to do that. But again, uranium holding up really well, and we'll give it the upside bias for now. On to ag. So I just want to point out DBC here. Another kind of choppy week, but this may have some juice here for a move. So I'm looking at the monthly time frame right now. We have a strong up move, and now you're just kind of pulling back and letting that 20-month moving average catch up. And for right now, it's got a nice reaction off that. So if this continues higher, you could get maybe even a 50% retrace. So 30.70 down to, so you could say maybe like 350. So I would say 26, 27 could be a target there for a bounce. I don't know if it's ready to make new highs yet, but that's a pretty good pullback pattern there on DBC. I'll definitely be watching that. MOS, same thing. So again, kind of pulling back to that 200-month moving average. We talked about the weekly 100 MA that got a nice defense last week, and now just an inside candle this week. So these are set up for a possible move here. So I am a little interested in those on the long side myself. We'll continue to watch those this week. Anyways, over to the dollar. So dollar is, to me, very close to a buy level. In fact, I would just give it a buy signal right now. So we've been talking about that 102 area for a while. That basically got hit on Friday. I think it could go a little bit lower here. I wouldn't rule out one more little flush this week. But I do like the dollar in this area, and I do think it moves a lot higher here after this nice correction that it's had over the last, like 3-4 months here. So dollar index coming into a lot of support. Gold, on the other hand, is going into resistance here. So right into this trend line. Take a look at that trend line here. That's worked out really well. And this is just kind of arbitrarily drawn here by me. It's not like a exact precision here. But, we went up there today and bounced right back off of that. So again, I've been telling you guys, upside in gold is a little bit limited here. And I still maintain that. I think, you're a lot closer to resistance than you are to support. I would not be a buyer up here. I do think it needs to do a lot of backing and filling. And silver, same thing here. Again, silver noticeably not making new highs this week, with gold making new highs. So showing a little bit of relative weakness. And again, there's that trend line going back to February of 2021. And again, that's just been kind of an area of resistance right now. I do think this has to do some more backing and filling as well. Platinum here, still backing off as well. This probably wants to go to 1025. But for right now, it's holding up really well, so we'll give it the upside bias. Copper was a powerhouse this week. And again, I've been telling you guys for a while, 396 weekly close. We closed way above that this week with that power move. So that is now negated. I think copper's about done here for the near term. It needs to do some backing and filling, maybe to $4. But nice move there. Nice outside move on copper to negate that kind of bear pattern there. And yeah, it's held up really well here. So we'll give it the benefit of the doubt. Now it is into some resistance. It does need to back test 4, maybe 395 here, but it's holding up well. So we'll give it that for now. Now over to Bitcoin. I finally have something to talk about here with Bitcoin here this week. Big move. So again, this tight bear pattern here is very compressed. So you know that whenever this does break, it's going to create a big move in either direction. And we had a nice short squeeze here in Bitcoin. Now, it did not negate, believe it or not, we did not negate this weekly red bar. So zoom in here. We did not close above that red bar high on a weekly basis, just so everybody's aware. So that is, believe it or not, still intact. And on the monthly, it's still well intact as well. So we'll be watching that going into this week. If you get above that level and close above it, that negates that, and that would be very strong. That would be a very strong move for Bitcoin here. My guess is that it doesn't happen. I still think Bitcoin has one more leg down here, but for right now, we'll respect that move. It does look like a short squeeze, though. I mean, this is
it's really just kind of an uncontested rally here. That this does look like a lot of a squeeze to me here. But for right now, big move there. If you get through that level, then we'll start talking about upside targets, maybe 25,000 after some consolidation. But for right now, Bitcoin's had a nice move here, so we'll respect it for the time being. Lastly, back over to the spiders here. One more thing I want to point out here. I pointed this out in my video on Friday. So if we do manage to break above this all-time high trend line, that doesn't mean that the bear market's over. I just want to point that out. So if you just look at like the SPX here, and we go back to, just going to give you guys a history lesson. So going back to 2000, you can see right here, we had a very long-term trend line here in this bear market going from October 2000 all the way until January of 2002. So this was, over a 12-month trend line here. And that's basically what we have on the spiders and the SPX right now is a 12-month trend line. And, it, hit 1, 2, 3, 4 times, and then it broke out. And guess what? We still rolled over and ended up shedding another, 30% or so. So you went from 1170 to, 770. So a pretty big move to the downside. So, and I'm just pointing this out because a lot of people are talking about this trend line right now because we're right into it. And we've had a 3-day weekend for this whole move to kind of like bubble up and fester. I just want to point that out. So you can break trend lines. People fall in love with these trend lines because they're very aesthetically pleasing. So they assume once they break, that's it, it's over. But there are other factors that I want everybody to consider here. But for right now, you guys got the resistance levels. Again, gap fill right here on the spiders. If you get through that, you got a pivot high at 405. And then if you get through that, it's 410 here. But we'll see what we get this week. It is OPEX. So remember to be careful trading it. And we do have a lot of earnings coming up. Anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. Talk to you guys all next week.